Hello, hello, hello. Good morning. Welcome to another ES Futures Trading stream. Today is Thursday, May 11th. It is 8:51 a.m. What I'm doing now. I am updating my profiles by hand. It has been I didn't do it the last couple of days. Yesterday we have an incredible day. The market, we have this report. What this report was? CPI. I don't know what the number was. I guess it was as expected, and the market got unbelievably long. You know, we have this. Oops, my bad. It had a huge spike, right? Remember also to put things in context. Now, everything is a series of facts surrounded by different circumstances. Now, we were coming for a couple of days that have very narrow ranges. Market was getting, whatever happened, very wide POCs here, very wide POCs. Whatever happened here, well, I mean, you have a spike like this, right? Either to the upside or to the downside. The other side of the spike would have been the trade. Why I say that? Because of the way how the market was being traded these days. It got too long here. Balanced here, right? Lots of these loans are still in the market. It's just hopping. Now, and look at these, man. Look at this. Look at this low we have. 1, 2, 3, 4 low wide here. Being long in this market was, it was crazy high risk to be long in the market, especially because the market was in balance. We have 1, 2, 3 day balance in the range. If this were taken, the odds of having a spike or squeeze or liquidation were high. But also at the same time, the opposite side have a bunch of stops here, coming from mechanical level here. All of this coming from mechanical level, POC of this day, right? We have to be aware of that. We got to know what circumstances are of everything we are doing. Because otherwise, what will happen is we will see the market going crazy. Just going higher and going lower, going higher and going lower. And we won't have an understanding, or at least something that can give us an idea of what is happening and what may happen based on that. When inventory gets too long, the next thing to think is, man, especially if that inventory is long in the hands of the weakest traders, or the ones who are doing the trade are the traders that don't have staying power, so the odds of liquidation are high. Same goes to the opposite side as well. And there is absolutely nothing going on in the market. We have a tremendous, an insane range. I don't remember when was the last time I see, or if I ever see a range like that, right? Let's take a look to see what I'm talking about. Now we got a monthly here, alright? This is the monthly. You got this 41.40. This level, I'll still keep carrying this level, because it was sold multiple times and the market is as open here, is still here, it can go whatever this narrow range, we have 2 month range, very narrow range, which has explored to the upside, was rejected, has explored to the downside, was rejected, and is a tight range here. The resolution of this range in the monthly can move the market, can be very dynamic. I can see maybe a channel here, for example, right? I don't trade that, but traders, technicians see that a channel here, the market is going to come to 4,400. That's the next destination. Oh, the market is going to come to 3,900, whatever, right? But this is a level of the market. I don't do that. I don't trade based on what the market is going to do. What the market is doing. Market is doing is in range here. We have a range, 2 month range, that is inside a bigger one. 1, 2, 3, 4, 5 range, 6, 7 range, and the whole thing is a huge range, 13 months range in the monthly time frame. In more than a year, the market has gone nowhere. The market is there. The market the market didn't do anything. Right? At least that's what I see. If you can see other things, please let me know. Let me know. I'll welcome other people's observations, what other people are seeing that I may not see. All right? Now the weekly. So we have a range in the bigger time frame. The bigger time frame is a range. The weekly also it has a range. You got 1, 2, 3, 4, 5, 6 range, right? 6 month range. The market explore has a breakout of this range to the downside. It's got into this lower one, the 1, 2, 3, 4, 5 week range, was rejected once. It comes to the high. Then the next week gave us excess on the upper side. Not a significant, but the excess anyway. And explored inside this range again. Was rejected. It 2 times has come back inside this range. What this level is? 4060, 4050, maybe around the 4050, 4060, something like that. Okay? And the current week is at the center of this range. You got 1, 2, 3, 4, 5 week range, and right now we are at the center of the range. Just look at that, right? The longer the market stays in the range, the more dynamic the resolution will be when the market comes out of balance. Because right now the market is in balance. Once the market comes out of balance, the resolution can be very dynamic. It means that we can have a huge rally or a huge break. Any of those two can happen. Which one? I don't know. I don't think anybody knows. Nobody knows that. I don't think somebody knows that. Because if that would be possible, we will have absolutely no chance, no opportunities to do anything, and that's not a good business, right? But the uncertainty of the markets is what actually gives us the opportunity. And the business here is uncertainty. The uncertainty is the business, and most people don't understand this. When something is absolutely sure, it's not a business anymore. Just think of yourself. Anything, any business. Right? The innovator, when the business is new, it has huge margin, huge odds of success. And failure as well, right? The opposite thing is true, right? Take any business. Once the business is successful, another ones will see what's happening and will join. and then another one, and then another one, and then another one, and then another one. And when you list, once you see what's happening, what everybody sees happening, everybody sees the business, everybody joins. When everybody joins, it's usually, and there's something here, it's usually the end. Right? The end is near. The opportunity is near. Right? Momentum traders, which are the ones that tend to be crazy. Most traders are momentum traders. Why is that? Why is the most traders momentum? Yeah, most traders are momentum? Because it's the easiest one. Now, the only thing you need to do when you are momentum trading is if the market moving higher, well, buy, right? If the market moving lower, what do you do? Sell. High, buy low, sell lower, or whatever. Right? It's very easy. It's a very easy strategy. Everybody does that. Everybody can do that. There's not too much there to learn. You know, there's not a learning curve there. Just buy and sell. Let's go back to the market. The market has done anything. We are in this range now. What can this is a balance, right? We have 1, 2, 2-week balance, and right now the market is at the center of the balance. When you are at the center, the odds are chopped. I mean, what happens in the shortest time frame happens in all time frames. The closer to the center of the range, the higher the odds of chop, the higher the odds of rotation. Can you see what's happening in the shortest time frame also happens in the higher time frames? Now let's take a look at the daily. There's a lot of craziness here. Very emotional, very emotional market here. We have a gap here, gap. We have this 1, 2, 3, 4-day range here. 4-day range here. The market look above the high. It had the opportunity. This market had the opportunity to print an outside buy. It didn't. The market was rejected here. But notice where the rejection happened. This could be relevant in the upcoming days. Notice where the market was. This is a gap. This is the low of the gap, the high of the gap. Exactly at this low. Notice where this day is. Exactly at the 50. Notice where this day is. Exactly the 50 as well. The other one, the 100. The other one, 200. Another low close by. This market is crazy weak. It's unbelievable weak. The structure of the market is unbelievable weak here. It doesn't mean that it's going to break right now. Alright? But what is happening, what I'm seeing is just like, the buy the dips here. And the market breaks a boom, buy the dip. I guess there's a lot of short-term trading going on. And you can see that in the craziness that is happening. And I think also the bigger markets are having a lot of manipulation. There's no way for me to know. I don't think anybody can know that, but there's a lot of. It seems like there's very manipulated here. Yeah, look at the bonds, for example. Right? This is an incredible weak market as well. You got 1, 2, 3, 4, 5, 6, 7, 8, 9 lows. 9 lows. This market, if this market breaks, it can take this one. It can come to this level maybe a couple of days from up here. Somebody's buying here. I don't know. It could be. I don't know. But Notice the divergence here. There is a gold. This gold is going higher as well. But notice also how these lows are weak. You got one, two, you got firecracker potential here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 days here at this low. There's a lot. Can you imagine the amount of stops that are here? Can you imagine if this market breaks, how these loans can be forced to liquidate here? What happened here also? 1, 2, 3, 4. Okay, down here, 1, 2, 3, 4. It can come all the way down to here. But markets, but market makes a new high. It is rare to make only one, right? Usually it's one high after another, after another, after another. Could be 8, 10, 14, who knows? And that's happening now in gold. We have a new high a couple days ago, and it's clearing the 2000. This is a magic level there. Gold, I mean dollar, also is very tight range. Dollar is falling. Crude short covering, it's in short covering mode here. I wonder if crude keeps coming lower, that is, I mean, that's energy, right? That's a signs of recession. Uh, could be actually. Um, and now you got a lot of these things going on with banks as well. One bank failure after another one. Who knows how long that's going to be. I don't know if anything. You start to hearing now that the insurance market could break. There could be that could be the Lehman Brothers moment. But let's go back to to the daily. The market is in between two gaps. We got a range. The rest of and this is a 13, 28 day range. This is a really wide range. I have never seen it, but I don't remember I ever seen a range that wide. Uh-uh. I got 3 years here. And then, no, not like this. This is a very wide range. If something whatever happens from here, it can have a huge rally. It could be a huge rally or a huge break here. Um, Notice the P. Notice the formation of the P here. The P formation. You have still. This range here matches this range here. I mean, I'm going to I'm going to get rid of this one now because this is really wide here now. Um, Gap in the high. This high also matches this one. Well, mechanical high as well. Um, let's take a look now to market profiles. I guess we already talk about what happened yesterday. The market got unbelievably long in the overnight, and we have a huge gap, right? You have a huge upside gap here, and if a gap is going to be closed, the selling or the buying, if a big gap is going to be is closer, right? Usually happens right after the opening, right at the opening, and that's what happened yesterday. Um, I haven't seen this kind of activity also in a while, which could be a sign also that the direction of the market is to the downside, right? But what's happening is just trades are since there is too much short-term trading going on, or basically only trading money here. The markets get crazy short or crazy long. And if you are going to go short, you have a big position, you know, you don't want a big range. You want you want to have your position as close, your last purchase of your last sale has to be as close as possible to the entry, right? You don't want too much of spread. And what happened yesterday was something like that. This is just crazy range, yeah. And now notice what's happening now. The context of things, right? You have a huge gap. I mean, huge spike to the upside, and then liquidation. But not of these loans from this day, or not just only this one, but the liquidation from this, the loans from this day, and the loans from this day. These ones are no more. These ones are gone now, right? And what this market is doing now, right? You can see the trading going on here. Oh, okay, well, it worked. It happened once. It's going to happen twice, right? You go higher and then liquidate now. And the market went higher and now, but that's how traders work. Their work. Short-term traders, right? Short-term traders or traders do what works until it doesn't work anymore. Right? I'm not trying to picture short-term trader as a weak or as a stupid or diminish the activity or the short-term trading. Just try to identify actually, right? When because if I can somehow have an idea what is the force behind the market that is moving the market one day relative to the other, I can have an idea, right? If this is money that's going to stick, is going to stay, that has planned to stay. So it is just very short term money, right? So because if there is short term money, if the market goes against my position, I know it can go away it can go away, long distances. I'm not going to wait. I'm not going to wait the market to, to run over me, right? I had to keep tight stops. And usually you do develop trades more than fast trades. When when one can identify bigger time frame money, that's money that may stick, right? I tend to use more developed trades when that happen. Uh, just after the fact, one can say something, right? This money, for example, what happened here, very short time frame trading here, that was just liquidated. And liquidation was not just of the longs from the overnight, but from here and from here, and especially because there was a four white week low here, and the potential of this trade actually is this one here. This is another triple intraday low that happened in this day. Remember what is here? The 50 moving average, right? This low is weak. It has excess in the lower side, but it's weak. It was bought at 50. And not just that, but look what happened here. Exactly at this level. Just a couple ticks, right? And this was a weak level. So this is exponentially weak. It's super weak now. Seems like that's the direction of the market, but could be too early. Now the high, when the market get these highs, there was, you could see how buying just disappear, right? Buying disappear here. Now yesterday there was huge selling here going on, huge selling. Once the selling happened, you know, stopping here, POC, not a good low, and then the next one, what this one is, higher the distribution, selling from half back on yesterday, half back today. Right now, half back is down here, right? Because the range had extension to the downside. But at the moment, this was half back, very mechanical weak, very mechanical level to be a seller, right? And then the market just got too short over. Notice where the market was bought as well. Another mechanical level down here. This is the high of the gap. And now, 15 minutes before the opening, the overnight inventory was, the overnight inventory was long, 100% long. It was being rebalanced before 8:30. Notice where seller is, where all the inventory is above seller, long, 100% long. Has some rebalancing, get long again, and is getting liquidated. If the market opens here, this will be gone. This will be history now. This is you can see what the you can see the direction of the market, right? I was going to the, what is the counteraction to the overnight inventory, overnight long inventory? A break. We're having a break now on that one. Okay, and also all of these longs, all these weak longs here are providing supply for this liquidation that is in progress. Now the market still has 10 more minutes before the opening, and it is going to open at the center. If it is just like that, it's going to be, if it remains around this level, it's going to open around the center of yesterday's range. Can you see where the center is? POC is up here, Halbach is right there as well. The closer the market opens to the center, the higher the auto chop. Chop can be very expensive. Chop is a market going high, going low, going high, going low. And higher they're also having a rotational market as well. Rotational market is a market that rotates, right? Rotates to the upside. Face has a movement, has an upside movement, then has a downside movement. When the odds rotational market, when we have rotational markets, it gives us much more opportunities, but these opportunities are very short. You have to take profits very quick. And the thing we have to do here is the adjustment, right? How do you adjust to that? When we are coming from a day that has a very, very elongated range, very long range, so that when the market travels long distance to the downside and then to the upside, traders I get used to it. You're unbelievable how fast traders get adapted to something. Right? They saw something, um, the market is going to do the same thing again, and that's what traps. Okay, that's the trap. That's the mind trap here. To dissociate yourself with what happened yesterday, while at the same time keeping all the things that happened yesterday, in the memory. Forget about that, right? Forget about that when building the strategy or when building the plan. But also, I cannot let it go because what happened yesterday could be very important to what I mean. If I want to know, you want to find out what's happening now. Can you see uh, the counterintuitiveness? How counterintuitive this business is? It's it is it is crazy how these things the how we have to adapt, how we have to open our mind to the endless possibilities that are here in this business that the market present us. Um, what else? Yesterday also was a day that has a huge
huge volume up in the last period of on after the market close. I guess this is I'm going to use my what happened here? Oh, here you are. Just a second, something is what? Oh, here you are. What happened with my chat? Where do you go? Come on. I'm having glitches. I need to open another one. Okay, what's going to where I was? Oh, I was going to show the histograms, but what I'm going to do is going to show the histograms from my homework. Because I guess I highlight it is highlighted here. Mm, let's see, I don't see it. I guess this is better. This is yesterday. The late rally. Oh, this is late rally high. Huh. Look at where this rally high is. You're close to this level. Okay. Oh, and notice this too. Can you see where the volume you had this inside bar? Where the higher volume is, where the volume is, it's in the upper side. There's a lot of stops here above here. The higher volume where it is in the lower side. Higher volume in the upper side, market is going to the upside, it's okay. Higher volume in the upper side, market going to the upside, equal. Okay. Okay, but something changes here. Volume in the lower side, volume in the lower side. But market keeps going higher, right? Very risky long here. These ones are history. Notice how close this, you know, there's huge volume here at the opening. Yes, there's a lot of selling here. Notice we have another high volume here, but this is going to the lower side, right? You got markets breaking here, lower side, lower side, lower side. This is when you make the adjustment. It's the first time when the market goes to the upside, it has volume in the upper, but the it is still there is high volume here, but notice how the more of the volume relative to the whole period is in the lower side. I got a bunch of this low is weak and bunch of volume here down here as well. These ones, I don't think these ones were removed here. They are still here, and it's adding. Can you see this volume is being added to this low here. What this level is? 4100. I bet you forgot about the 4100. Hmm? All right. Okay, okay. Now 5 minutes before the opening, I have zero interest in this market. Just for you to know. Opening inside is, there's at the center, can you see? Also, and also for, I mean, more than March high, I guess. What takes precedence here is halfback. Is halfback. Well, you can use both. Both are the same. Um, I think 5-2. I think this. I I I have kept this one here because there was a lot of ball or activity around this level. It's being used this level. We have some high volume around these levels here in, in the aftermarket with what day aftermarket and the pre-market yesterday. Pre-market yesterday, aftermarket this area here. I know um and the liquidation of this inventory on this rally. And the market was doing short covering here. So what I could expect here maybe is sideways trading here around Saturday or maybe around March high. This trade, I mean, the big trade has been developed, has played out. I'm taking this. There was something here. Taking these lows. There are more. The same way the market took these lows with with, with passion. The market trade towards and through this level. There something like that, I believe, could happen when the market comes down to this level here, the 41.70. This level is not good here, not good at all. All right, couple minutes to the opening. I'll take a small break and come back just before the opening. I went to make myself some breakfast. That's my interest in the market. Okay, I didn't open. I didn't even open my trading account. I'll open it to see how. Let's see how some options maybe price it. All right, market is open. Oh, the exception. Remember, the higher. The closer to the center, the higher they also chop. The exception of that is when the market prints its way out of the range, fingerprint its way out, which means the market could open here and then that would be unbelievably weak market. And the free spirit, for example, comes out of here, or it comes out of here. That's a sign, something. Mm, I guess this. I can't remove these things here. It could be misleading. Yeah, that could be misleading here. Can you see the similar? Can you see the similarities from today's opening to yesterday? No, it started selling, right? Selling, just like yesterday. But the difference is yesterday we have inventory here. We have a lot of longs. We don't have that now. We make. Let's see. And there was huge amount of longs yesterday. This was some important reference to me yesterday. I'm going to let them go. See what's happening in the other markets. Bonds are having a party there. Gold is, yes, range trading. Now, if something like yesterday could replay today, I would see its volume higher than yesterday. Because the first thing is hot, it opened a little bit higher, and it higher volume. What the heck is this? Oh, I didn't even see any options here. This is the mental adjustment that we need to do is very important as well. Identify what happened yesterday so we can make the adjustments. Now there's a lot of buying here. This is the center. Remember the 28 day trading range. This is the center of that range. Right now we are right at center. The market is liquid. This could be a liquidation of the 100% long inventory, overnight long inventory. All right. Next thing on the lower side. What do we have on the lower side? Let's see how the market trades. I mean, the fact that this is stopping here, for example, tells me something, right? Now, next thing is let's see how the market. Let's see. Okay, this is value area low. This is value area low. Let's see the market stops there. Start to do something. If the market stops here, bounce, stops here, bounce, sells from here, comes back, sells. Yeah. Okay. And then look at the way that has stopped. Oh, that's not a good low there. That's not a good low. That low has low odds or remain there. Now, if buying comes here, okay, then you will know that that's a weak buying, right? Now, if you are short here, don't let the market, don't let the market run away from you. I have zero interest in doing anything here at this moment. What happened? There's any news? Who buys here? Who buys? Everybody sees this low. Everybody knows what value at a low is. This is short term buying here, weak buying here. That that low is weak. Okay, it doesn't mean it's going to be taken right away. Alright, cool. It's this is a remember what happened. What happened here? It is rare that happened. I mean, it was rare for me that happens kind of like a right away the next day because it takes time. Sometimes it takes 2 3 days. I am still carrying this low, for example, right? And we have 1 2 3 4 days has passed since this day. Okay, when this law will become relevant, I don't know, but that's information I'm carrying. When this highs, for example, there's huge volume here and huge volume, and this low will become relevant. The thing is, once we do our homework, we prepare for the market, and as soon as the market opens, everything goes out of the window. We forget. We forget quite easily. You know? We have to do this thing over and over and over again until it sticks. And that's another way to say that until a habit is formed, you know, we start having a different way to see to to react or to work. We are habits. We are creatures of habits. We are made of habits. Man, that's incredible amount of volume here. Now, let me see what do I have. Let me see if I can show you something else. Nice momentum here. Notice how this low, right? The bigger volume is in the lower side of yesterday's, and there's this huge volume here, really huge volume. I saw a lot of buying here. This histogram is having volume on the lower side. Maybe it could be too short. Maybe it could be a could what could happen here could be happening is this could be a liquidation of these loans, and finally, when market opens, finally, these loans are, throw the towel, right? Oh, this market is not coming back. Never is coming back up. Okay. Yes, that's sad. Right? That's sad. Sad, 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 sad. When that inventory is removed, when all those loans, all those weak loans are gone, what else needs to happen? New selling needs to come, needs to show up. Um, if there is no new selling along with the liquidation of the loans, that's when problems can happen, right? That's when we realize or traders don't realize that that's happening. This could have been just this break, could have been just liquidation of this overnight long inventory. Now, notice that we have higher volume here, measured in periods, right? We have seen, I have shown you just the histograms. Remember this higher volume here in this low. If you see the day, you won't see that. If you see the whole histogram, you won't see that. The whole histograms, the accumulated is this. Most softwares just show this. Oh, there's a lot of inventory here, right? There's a lot of inventory here. There's nothing here. But this is a reaction, right? In the market, there is, well, but these were longs. I mean, these were shorts, and now these are longs. And these shorts here have been removed with this rally. They are gone now. But the overall, the daily, counts both of them. I mean, it depends on what is the strategy you use, right? I use inventories. I see the markets in terms of inventory. Inventory. Um, Trading for me has a lot to do with balance, excess in inventories, and it takes time, right? Now the context, right? We talk about this. The also chop were high. Chop is the market going low, high, low, low, high, low, high, low, high. We got long inventory here. We were talking about if you are short, don't let the market run. And don't put your stop very tight, very tight. But the market is going to come back. Yesterday it come back up here and then break further down. I am short here and I am underwater this much now. But it will come down. Don't everything is a series of facts surrounded by different circumstances. We have to know what the circumstances are today. We have to know what the circumstances were yesterday. You know? And I see this market is crazy weak. We talk about the weakness in the lower side. This one coming from here, non-excess here, non-excess here. You Crazy, crazy, man. Unbelievable weak market. And the weakness keeps adding, right? Now we have another low that comes exactly, you know, to the tick, to the tick. Can you believe that? To the tick. Value area low. Yeah. If this market has a rally here, man, this is man. But we have an insider here. We have an insider. Now, try to see. Uh, when when you start to see or to have a panoramic view of the market, to start to have some perspective instead of looking too close. When we look too close, we kind of get lost. Price got us. Price catch, plays with our minds. We see price going higher, price going lower. It's just like driving, right? When you drive, you don't look just right over the hood. You look everything. Just imagine yourself driving. You're looking down the road. You are not looking in front of in front of your car. You're looking down the road. At the same time, you have a peripheral vision. You are kind of have an idea what is in your side, what's in the left, what's in the right. And also, you have an idea what is behind you. You have rear view mirror. You are not looking at the rear view mirror all the time. Maybe you don't even look at the rear view mirror, but you know what's going on behind, on the sides and the front. When we get too close with what we have this kind of tunnel vision, we it is actually dangerous for yourself, for ourselves. And that's what happened here when we don't have a appreciation of what is happening in the bigger time frames. Because we are not the only ones who trade this market. There are investment money that raise daily, weekly, monthly time frame money as well. Let's have an idea. Let's have an appreciation of this market. Right? Um, if you don't have market profile software, you can build your own. You can do your own. I have. I got. I got busy. I didn't do mine the last couple of days. I started doing just today in the morning. I still didn't calculate the value area. I can go ahead and copy just on it, but I like to calculate. Until you get used, and you know how value moves, how relevant value can be. And get the rate. It's unbelievable also how you know how how much noise these charts can have. I mean, not this one, but this come on, candlestick charts. If you can get rid, get rid. It took me a while to get rid of this. This is just the best advice that I ever had was to get rid of this candlestick charts. Forget about it. The 5 minutes chart as well. This is just too much. Too much. You know, we got you got we I got lost in the minutia when trading 5 minutes charts. Just too much. Too much noise there. You can see none of my charts have candlesticks. None of them. I use this to check the market basically. I got this. I don't use this. I don't know why I have this one. No, no, I don't use candlestick charts. Okay, 10 minutes. 10 more minutes to go. It's 1/3. 1/3. It could make this higher. It could be a little bit higher. Now this low has been repaired. Remember, we said we were talking about how this low, how those are stops being taken out. The movement to the downside. You know how it happened. Boom. Now, if there is something serious to the downside, this is these are games, right? That bigger traders play. You know that there's a bunch of stops here, and the trade is just take those stops. No, that was the trade. A couple ticks, 1 point, 2 points maybe. Um, that's it. If there is something serious to the downside, the market just comes back here and continues its way to the downside. I guess I was talking too much. I didn't watch. I wasn't paying attention to the market. All right, this gap low. Let's how much? 4100 here. 4105. Why are you using? I checking 4105 because the center of this, the center of the gap here. I'm not interested in doing nothing here. No. I want to see the market take can fingerprint its way out of this market. That would be a sign of weakness. Here, this could have been just again taking this stops out. Still, still remember the overnight inventory. And this kind of games happens all the time. You know, that was the trade. You know, bigger somebody can move the market in a huge amounts of capital there. Boom, put a big order and with an immediate target just a couple ticks below. You know, 1 point, 2 points maybe, but just ticks. Huge amount of money there, and that's the trade actually. No more than that. But traders, I mean, short-term traders kind of like get confused, right? Get emotional. Oh God, that's a big movement to the downside. Let's sell. But the market is breaking. Oh, the market is rallying. Huh? And it is very emotional. This business is very emotional. When I have a rule, a written rule that says when I get too emotional, I stop trading. I am finally writing my rules. It has been I had these rules in my mind, right? But when you have it in your mind, it's kind of like foggy. It is easy to bend the rule. If I get too emotional, I just stop trading. If I am tired, yeah, I have not sleep well, I don't trade. If I haven't done my homework, I don't trade. No? Because the risk is high. And statistically, I got these numbers as well. You know, when I did not pay attention to those rules, usually it's a bad day. Or usually I don't have a good day. So the risk reward is, I measure risk reward over there also. The risk reward is high for me. And that's personal, right? That's part of my plan. That's the reason why I don't call trades. Because everybody is different. Right? Everybody is different. Everybody has a different mindset. Everybody was raised different. The way I hope your brain is wired is different. What the objectives are is different. But the size of your accounts is different. Of our accounts is different. Some people trade is full-time trading. Some people use is a part-time trader. Uh, some people have one job and come here every time they have an opportunity. Uh, Not even as a and everybody's different. One thing remains the same. One thing is common, and that thing is the market. So that's why I think that having a market appreciation, market understanding is very important. It requires patience, a lot of time, a lot of effort. This is a highly competitive business, very highly competitive business. Just like basketball, football, soccer, baseball, very highly competitive activities. Um, what catches my attention here is this thing. This no, you can see the market is going lower. Well, my market is going lower here. You see, we are still inside yesterday's range. This is we're in balance. This is another day that's adding balance to the 4 day. for the bodies, 1, 2, 3, 4, the balance, and another one is adding here. I don't count this one because the market broke, has a breakout here and then come back. So just only 4, no 6. Where's Settle? Oh, Settle's up here. God, the tongue is to the downside. Inside the trading range. Alright, alright. Questions, comments? Look at this volume. God, volume is going to be lower than yesterday. We have 4 or 3 more minutes to go. It can end slightly lower, maybe 3% lower if it ends up here. And yesterday we have higher, huh? At the opening. The next period even higher. The next was even higher. Now there's something has changed. There's no volume here. Market is breaking, but there's no volume. Well, at least no now. Look where the market is being sold from now. Value low. Comes back here. So it was so now very short-term trading going on here. There is a lot of back and forth. High volume at the center of the range. High volume at the center range. That's some blocks here. This 1,000 here. Okay. I am changing. I changing the streams. What I'm going to do is I'm going to do some. I'm going to do the pre-market and um, a recap as usual. But the market update, I guess I'm thinking to move that one to when the market is closed. It is getting in the way. It's getting in the way. It kind of like get me distracted. I have noticed that I am missing opportunities when I am doing that. Kind of like keeps my focus, my focus, get my focus out of the market. While the morning stream helps me to be focused, to remain calm, and not to get too emotional. Uh, and that's an advantage. That's something good. I believe it's something good. You know, it removes the pressure to do something. I have to do something at the open. The market is breaking. I have to sell. The market is running. I have to buy. And that thing, it had helped me a lot with that issue that I had. Now that low, the question is, do we have? Oh, come on! But coming from March high also, you just notice that coming from March high is not good. That's not good. And notice how this POC, POC is up here. Halfback is in here. FDIC francs for billions and everything. Oh, more pressure to the banks. I got this news here. And I was talking about how this POC. This POC could have been all the way up to here as well. Could have been anywhere in here. Could have been up here. Right there. Now, if there's a rally here, having this kind of lows actually limits, right, limits the extension of the rally because this low actually pulls the market lower. This kind of lows. This low is not good. It wasn't good when the A was here. It is not good when B is giving us a match. And actually, when the market does this, puts this low inside this one, and maybe even this one here. Now, where the selling is coming from? Value area low. Yeah. Let's see how value develops here. If value comes get out of yesterday's area, value area. Right now it's overlapping to lower. Yeah, high no good, low no good. Yeah. Okay. If you got a position here, don't let the market roll value. You know, put put your stop very close, very tight, and they also having rotational markets are high when the market is opens inside previous day range, and rotational markets give us more opportunities. Remember, but these opportunities are small ones, not big ones. And also don't expect something big to happen. So that's the expectation. Expectation. Okay, volume was right there. How much is? We say it was about 3% lower. Let's see how much it is. 3.98, 4% lower. A little bit lower than yesterday. If I have a break, for example, I want to see higher volume. That will mean there is something there, something serious happening. On yesterday, if there was something serious yesterday to the downside, the market would have, you know, keep the distributions. It didn't keep the distributions. It missed the opportunity to be an outside day, outside of the 3-day range. It just was what scope with this on this low. Now, should I look at this one? No, I don't look at that one because it has already been traded. You know, this day here took this one out. No, see, it's not for me at least. It's not relevant anymore. You can see what kind of trades I take, right? My trades take time to develop, sometimes even hours. Um, you may be another kind of trader, right? But we all use the same information. And the information that you are using is the information I'm using too. We are because we are watching the same market, and this market has a space for everybody. You know, we have to identify also what kind of traders we are. That's very important. That's a very important uh, observation or thing we need to do, but we don't. M- We don't actually. Most people don't do. They don't know what kind of traders they are. They don't know what kind of traders they want to be. Right? Because if I am a short-term time frame trading trader, I'm not going to take overnight trades for something, right? But sometimes people take trades, take small short-term trades, and they take it overnight. Why? Right? If you're a short-term trader, why you take a trade overnight? Why you trade? You know, just it helps. So actually, to understand what kind of traders we want to be, and that comes with self-understanding as well. When you start to know ourselves, we start to identify what kind of person we are. Are we emotional? Are we fast thinkers? Are we slow thinkers? There's nothing. Not there's no. I mean, the way how it's named fast and slow could give us a negative bias about the slow thinking. But it has nothing to do with being good or bad at something. It's just a way how we process information. You know? For example, I got a background. You know, I have worked in labs. Um, I tended to be precise, exact. Working on laboratories, when you use standards to run your tests, for example, you have to be very exact in the amount of volume, weight you take for your samples. And you have to follow these procedures, these ASTM procedures, that the standards that to the T. Okay, because otherwise, the precision of the test could be affected, the exactness as well. I tend to take, my decisions you tend to take time. I used to think a lot about my decision. So if I do that, and I try to be, I didn't know that who I was, because after when I was when I moved here to the States, I moved into another industry, moving to construction. I have the mindset that I have from a lab. And it was very hard for me to adapt to construction because I want I want exactness in construction. And actually in construction exactly doesn't matter. You got your prints, the architect give you the prints of what his vision is. The civil the engineers just do the design, they determine what kind of materials we want to use. And then I come to do, to materialize the vision of the engineer. How I do it doesn't matter. I didn't know that it doesn't matter. It took me a couple. It took me a while to understand that because there was another guy that has the same print and use a different way, a different approach. And there's another guy that do different. What matters is to find a product. And I couldn't understand that. I couldn't, you know, I was so, my way of thinking was so rigid. I was so used to have standard procedures for everything. I used to read the manuals before. I don't read manuals anymore. If something new comes or I had to put something together, or I just use logic, right? I don't see manuals anymore. It's been a while, years since I really have I fully read a manual. Okay, the market has a tone to the downside. You can see the saddle is way up there. We are inside yesterday's range. Very mechanical trading. It doesn't mean that's a bad trading. It doesn't mean it's going to go to the opposite side. It just gives me an idea who is doing the trade and how I'm going to plan my trades. I still haven't seen anything here, anything that I'm interested in. If you have seen something, you do. If you have if you have did something, please let me know. You have a question, opinions. I would like to listen. Otherwise, as usual, I guess this will be the end of the modern stream. I wish you guys a really good rest of the day. Stay safe. Now, before I go, look at this. There's a lot of volume here at the lower side. Ah, come on. The upper side here, high volume here. This period has formed high volume around this area, which coincides with the higher volume mark. I don't use this to trade, right? Just to observe. For example, okay, what happened here? There's a lot of volume here going on here, but I don't see too many blocks. There's just ones here. So what I can do, I may use, for example, I will. Oh, come on. I will highlight this, for example, right? Highlight that. What the market does with this area, with congestion here. If these are longs, if this is somebody trying to buy the market and the market trade below this could be, a liquidation, right? This can be a liquidation. It can move the market a little bit lower here, one bit at a time. If these are shorts and the markets start to trade away from this level, that could be, maybe shorts could be squeezed. There could be a short squeeze. And not short squeeze, but short covering. Short covering. There could be some upside trade here, for example, right? But it doesn't have to happen right away. It doesn't have to happen now. No, I may use this for maybe the next period or the period if the market breaks, the markets come back to this level. What it does when it comes back on B, C, or D, or F periods, for example, right? And the opposite way as well. It might rise and come back to this level. That's how I look inventories. That's how I do. That's the way how I look the markets in terms of inventories. Yesterday I have an idea. I have an idea and a plan. Today also have an idea, and my plan is do nothing. Huh? Now, if this was shorts, this could be short covering, right? Where the market could be. And if the market comes back to half back and keep its way higher, these guys will start to cover. They might start, okay, the trade didn't work, right? The trade didn't work. If the closer the market comes to halfback, this is the day, and this one's the day, A period. The closer the market comes to this, the higher the risk of these ones, of these shorts to start cover. All right, but the tone is to the downside. Yeah, market, the trend now, the tone is to the downside. Set us up here. Now, trend market, I don't know yet. We only have two periods here. Values overlapping to lower. If if the market keeps going to the downside, but value cannot move lower and start moving higher instead, that could generate some short covering at the closing. For example, well, can you see how I'm looking forward, right? 4, 5, 6 hours forward. And those mental scenarios are updated all the time. Are updated all the time. Right now it's to the downside, but if the market comes up to here, exactly to halfback, okay, that could be sign something could be changing. For example, so I start doing the mental adjustment. Now look at this. Look what this high volume is. Where the high volume is now in this period in B, not V, V, B. I mean B. Higher volume here coincides with this volume. Hmm? But still inside yesterday's range. Okay. All right. I wish you guys a good rest of the day. Stay safe and happy trading. Be careful out.